All right. Welcome, everyone. Thanks again for joining us today for the second session on the public API webinar series. If you joined us for the first session, welcome back. And if this is your first time here, we're really glad to have you. Today's session is focused on showing serious traders how to use the public API in real workflows. And today we're going to focus specifically on automating options trading. And before we get started here, just an important quick note. I just want to make it very clear that nothing in this session is financial advice. Options trading involves significant risk and is not appropriate for all investors. So please review the options risk disclosures, the fee schedule, and the rebate terms linked here. And today we'll just keep focus on infrastructure and execution, but just important to understand the risks before trading. And I'm Matthew Foster. I'm the lead API. I'm the lead API trading director here at Public, and I spend most of my time working directly with active options traders who are either automating today or they're actively trying to scale their execution. And I'm joined by Tarric Sookdeo, who's our head of API development. And Tarek owns the developer experience from end to end, and he's going to be running the live demo here shortly. So you can see exactly how options trading works programmatically here on Public, from the setup all the way through to execution. And here's how we'll spend our time today. So I'll start by defining who the session is for and what you should expect to walk away with. And then we're going to cover how options trading works on the Public API and why Public is structurally different for API-driven options trading. We'll walk through some workflow pillars that really matter the most for options traders, stuff like risk validation, multi-leg executions, and scaling automation. And then Tarek is going to run a live demo on the second half. And we'll also close with some Q&A. So please put your questions right there in the chat. And when the time comes, we will get to as many as possible. And if we don't get to answer all of them, I'll make sure that I personally follow up with you. All right. So today's session is really designed for active options traders. So if you're trading spreads, you're rolling positions, or you're managing multi-leg strategies, this is for you. It's also for traders and builders who are either already running automation or they're considering moving from a discretionary to programmatic execution. And most importantly, this is for traders who really want to increase frequency or volume without increasing any type of operational risk. And as options markets become more competitive and more strategies are automated, execution quality and cost structure really matters more than the signal quality. So that's why better infrastructure decisions are becoming a real edge for traders right now. And by the end of this session, we really want you to have three concrete takeaways today. First, you'll understand how options trading actually works programmatically on Public. And second, you'll see how complex multi-leg strategies can be executed with confidence rather than just stitched together manually. And third, you're going to understand why Public is optimized for options-driven API trading from both a workflow and an economic standpoint. All right. So at a high level, the public API gives you programmatic options execution on the same core infrastructure that powers the public platform itself. So this includes native support for multi-leg strategies, real-time pricing and execution. You have full read and write access to your account, your positions, and your orders. And for most options traders, what we've seen is the bottleneck really isn't finding trades or strategies, it's in the execution. Managing spreadsheets, UIs, custom scripts, and margin in real time is really where we're seeing workflows break. And the API at Public here is designed to collapse all of that complexity into a single and consistent execution surface. And once traders really understand what an API can do and what it's capable of, the real question becomes whether it's built for how options traders actually operate at scale in the market. And Public is built for active, for high volume options traders with infrastructure that's really designed for real-time execution and repeatable, consistent workflows. So just as importantly, the economics here are aligned with the trader volume, which is going to bring us to the next slide here on rebates. So Public is the only brokerage right now that's offering an options trading rebate program. And the goal of this is to really help active options traders reduce effective trading costs as their volume increases. So for multi-leg and for high frequency strategies, traders know that the cost can compound very quickly. And the rebates here really directly offset that friction and that fee drag. And the rates are depending on volume, the underlying asset you're trading, the execution method. So we always want you just to reference the official rebate terms. But the key takeaway here is really simple. We think that a public scale should be rewarded, not penalized. And in practice, what this means is that higher API volume can really unlock meaningful per contract rebates that are going to directly reduce your execution costs. So this is designed specifically for automation, repeatable, higher frequency strategies that are used by retail traders that used to be edge cases really are not the edge case here anymore. So multi-leg strategies benefit in particular because the rebates help offset that additional friction of spreads, combos, and importantly, this really improves the economics without requiring you to change any of your signal, your risk model, or your execution logic. And how we describe this is we describe this as an API that really thinks like a trader because it's mirroring how real traders plan and execute. And the first pillar here is pre-flight checks. So this means validating your capital, your margin, and your risk before you're sending orders. And the second pillar is native multi-leg strategy support. So handling spreads, handling complex structures as a single unit. And the third pillar is being able to scale with confidence. So the automation backed by guardrails here, so that traders can really increase their size and their frequency without increasing any of their operational risk. And this is the difference between a script that works in calm markets and a workflow that you can really trust in production during times of stress and volatility. All right. So with that foundation in place, Tarek is going to now walk through the live demo. He's going to show you how to set up the Python SDK, build an options trade step by step, validate the risk, submit the trade, and then I think we're also going to show you a multi-leg workflow. So this is the exact kind of workflow that active options traders are running today on public. All right. So Tarek, I will hand it over to you.
Awesome. Thanks, Matthew. As Matthew just said, let me just share my screen and I will walk through some demos here showcasing like how you can use our API and specifically using our Python SDK, which is open sourced and on GitHub. You can go view the code. You can view the code for the SDK on GitHub and also pip install it the way you would any other Python package. You can also contribute to it. We've already had some community members create pull requests for the SDK, which have been great to contribute to the code base to shape it however traders would use it. So the simplest kind of option strategy that you could possibly trade is a single leg strategy where you're just simply buying or selling a put or a call for any given ticker symbol. Would anybody want to like throw a ticker symbol out there just for this example? Sure, Max, go for it. Hello, Max? Okay, I guess we can't really hear you, Max. So we're just gonna go with Google here. No reason why, just for this example. So I want you to think about like the standard kind of options trading workflow that you would work through, where you would select like the symbol that you want to trade, the quantity of the options you want to trade, the kind of Greeks that you would want that options contract to have, how far away it is, like how far expiration wise it is, where the share price is. We can do all of these steps sequentially and automatically do an automated workflow using the API if you have a script set up. So I already have the script set up, so you can run it. And it's fetching all this information about the Google's option chain as well as the stock. And you can set it up to also do a bunch of analysis. So right now, these are the current prices for Google. We had the trade parameter set for 45 days out, but the closest option contract is 36 days away. There's 71 call contracts in the chain right now. And this is the one that, based on the parameters and the calculations, is the closest to the risk setup. You can also view the risk profile here, based on the price of the share and the option contract. And this is what Matthew was speaking about, where we can pre-flight the order. The pre-flight lets you know the risk to your account, how much it'll cost if you're able to place a trade, as well as any fees, or as Matthew mentioned, the rebates. In this case, it's one option contract at the top tier, which will be 10 cents in rebates. If all of this looks good, you can simply in the script type yes or no to place a trade. I'm gonna type yes. Obviously, markets are currently closed. This is live. So the trade won't execute, but it was placed. And it was placed successfully. This is one example of a single leg strategy that you can place using our API. But most people aren't just trading single leg strategies, they're also trading more complex multi-leg strategies. This includes spreads, condors, butterflies, you name it. And you can also run those on our platform. I have this script here called credit spreads, and it runs a very similar workflow, but it's working in the manner for a credit spread versus a single leg option. So in this case, anybody else want to try to recommend a ticker symbol? Oh, in the chat. Here's TMC, AMD, and all right, let's do AMD. Sorry, NVIDIA. And let's do a put credit spread for AMD, right? Whenever you're doing a credit spread, of course, you care about the delta and the time to expiration. We're just going to keep those the same. zero point 0.3 on the delta and 45 days out. And we'll run the script to check the risk and the parameters. So the script ran very similar steps in terms of getting the price of the shares at the moment, selecting the expiration, getting the contracts, and then determining which one's the best. But now the risk analysis is specific to credit spreads. So you can see right here, it seems like this would be the most likely outcome for this contract, where you'll get $145 in premium for the credit spread, and your max loss is about $355. This is the pre-flight response for a multi-leg strategy. Something to notice here is whenever you're placing a multi-leg strategy using our multi-leg endpoint or the multi-leg function inside of the SDK, it rolls up the strategy to understand the context of what you're trying to do. In this case, this is an AMD bull put spread, which is exactly what the strategy was, and it will reflect um, that same way on your account, including the effect on your buying power and the effect on your margin requirements. Again, if you like this trade, everything checks out, everything the API was set up to analyze looks good, you can just type yes, and the trade would place. It will not execute. We are in after hours right now. So those are two use cases for the API and the SDK, single legs and multi-leg contracts. And it's not going to stop at these bull credit spreads. There's credit spreads, there's debit spreads, there's condors, there's other types of strategies you can run, and though they can get rolled up and the system will know like what you're trying to do. Cool. I'm going to pass it back to Matthew now yeah, for Q&A.
All right, excellent. Yeah, so we can open up the panel now to Q&A. So if anybody has any questions, just feel free to raise a hand, pop in here. Happy to help. All right. Yeah, Max. I think Max had his hand raised. Andy, Rumi. Yeah, so Max, I think you're able to speak here, so you can ask anything you want. Can you hear us, Max? Okay. Yeah, I don't think Max, his mic is working. I'm gonna move down to Andy.
Can you hear me?
Yeah, hey Andy.
Hey. So mine is just really a question of because I wasn't in the first session. So where do I go download this um is it an SDK or API? What is it?
Yeah, good question. So the to get your API keys, you would have to in your public account go to your settings and then click on security, and you should see a tab there that says API. And from there, if you click on that, you will be able to generate your API keys. Also, from there, you'll be able to view our API docs, which links off to the SDK for you to download on from GitHub or as a pip install.
Okay. And that's available for the free public account also or just paid?
No, it's all open and free to access.
Okay. Thank you.
Mhm.
Sure thing. All right. Harumi. I think Harumi hopped out.
Oh,
My question is the
Oh, there you
same,
go. Yeah, gotcha.
same as the previous person. You know, I wanna get the program for this API program or the Python programs. Yeah,
Are
can you
you
hear me or
sorry, are you asking for the scripts that we demoed here, or are you asking how to access the SDK to create your own?
yeah, access to the SDK?
Gotcha. So the SDK, if you know, if you go to
Mm.
public.com/API/docs,
Just
you'll be
one
able to
second.
access our API docs, and from the API docs, you'll be able to access there'll be links to the SDK, which is open source on our public GitHub.
So public.com,
Yep, slash
then
API slash docs.
slash docs.
Yeah.
Okay, okay,
And
thank you.
yep.
Sure thing. All right. I think we've got George here. Yeah, I think George, you're live, so you should be able to speak now, I think. Let's see here.
Yeah, just unmute George and you should be able to ask.
Yeah, I'm trying to unmute him right now. Yeah, I'm not sure why it's yeah, it's not unmuting. Let me see here. All right. Yeah, George, you could just put your question in the chat. For some reason we can't unmute you here.
Oh, it seems like George asked in the chat, do you accept corporate accounts?
Yeah, so right now we only support individual accounts, but corporate accounts are definitely on our roadmap for 2026, and I can give you more color on that once we get a little more internal insight into when those will be available. All right. Andy already asked a question. We've got Jeremiah.
Sorry, I had one more question I forgot to
Yeah.
ask. So do we can we get access to the examples Python scripts that were shown?
Yeah, absolutely. We can send them over to you after the webinar.
Okay, thank you.
Sure thing. All right.
We
Max,
have we have one in a few good ones in the chat. One of them from is how do rebates work with IRA accounts?
yeah, that's a great question. So rebates with IRA accounts will work same way that rebates would with, any other type of brokerage account. So all of the rebates on options are just going to be treated the same regardless of the account level.
Thanks, Matthew.
Yeah,
This is
sure.
all in the Q&A, not the chat, it seems like.
Okay.
Um, One from Cheryl that's a good question is, does public have paper trading for testing the API? We currently don't have a paper trading environment, but it's something we're working on, and we hope to get that to you guys very soon.
All right. See anything else there in the chat? All right. I think Jeremiah had a question. Yeah, Jeremiah, I'm just gonna try and unmute you here.
Can you hear me?
Yeah, yeah.
Yes, sir. Now you said in order to get the API code, you go to settings, security.
Yeah,
Yes.
go.
Yeah,
Sorry.
when I do that, I don't see that option as far as the API code is.
It should be on the left side. Once you click on security,
Yeah.
you don't see it there?
No, I don't see it. No.
Interesting. Let's follow up with you after the webinar just so we can see like what's going on there, if you don't mind.
Sure. Thank you.
Sure.
Harumi, did you have another question as well?
We use the Python for the to run the API, right?
You can use any programming language you want to use the API since it's a RESTful API. It's programming language agnostic. As long as you can send the auth token along with your request, you should be good to use anything. We have a Python SDK because it's a popular language our customers use to interact with our API.
So so the how should I say? So after downloading the program, so I have to have the Python. Am I correct?
You don't
Or
have to use Python. You can use any programming language.
but then do I have to write the program?
You would have to, yeah, create your write your program.
Oh, I see.
Yeah.
Do you think I can use MATLAB?
Can you use, sorry?
MATLAB. MATLAB.
MATLAB?
Yeah, MATLAB.
Yeah.
Yeah.
Yeah, you can use MATLAB.
Okay.
Yeah.
Uh,
So suppose I get the Python program, then how should I say? I have to write the MATLAB program from the Python program, or do I have to
so
get the Python?
yeah, so again, we don't like necessarily recommend any specific tech to use. We offer the API, but we like it's up to our customers how they want to integrate with the API. So those are all decisions and like how you would want your trading system to work, if that makes sense.
Mm,
Yeah.
it's-
We could follow up with any questions you have after, Roman, just to give others a chance here.
okay.
Yeah.
So,
Sure. Andy, I think you had your hand raised.
Okay, sorry, one more.
Yeah.
So as far as the demo went, you showed being able to purchase, but the automation part of it, it's not clear to me that you could actually do a full automation where some sitting out there when the conditions become available, it automatically puts on a trade, and then condition for sell automatically happens. I that wasn't clear to me, and I just wanted to know if you could speak up on that a little bit.
Yeah, sure. So the demo, the one with the single leg, just because that one's easier to explain, it showcased the you entering certain parameters. And the API has a bunch of different endpoints. One to get the different the options chain for that endpoint, one to get the expiration dates, and one to get the Greeks, the option Greeks for the endpoints. And using the aggregate of all that data as well as the quotes for the different options contracts within those like the options chain, the analysis was done and it selected one that was the best. Then from there, it calculated, there was like parts of the script where it calculated the risk parameters of the trade. And if you did like the risk parameters of that trade, you can like type yes or no to whether you wanted to execute the trade or not. However, that step could be completely skipped if you wanted to just automatically execute the trade, and then from there you'll get an order ID. You can then keep track of the order ID as well as like the performance of the trade using the API. And if you have specific like cell requirements, those can be programmed in as well.
Okay, so the demonstration was really showing that it required user interaction, but it was based on you determining that the criteria that I've entered has been satisfied, and I'm happy with the results it did in its analysis. So that's an additional part to being able to do the full automation where it requires interaction. Is that what I'm understanding?
Yeah, exactly. It's actually simpler to skip the whole interaction and just let it send the trade. It's less code to do that. But some people do like to like be the final say in the trade, if that makes sense.
Okay, so then say I wanted that interaction, I placed the trade, and it's now performing. Now I have a sell criteria that could be programming also that now no longer requires my interaction. Once that say I wanted to sell at 21 days before expiration, that automatically happens. Can I program that in?
Yeah, you can any form of automation you want to use, you can use it.
Okay,
Whether that's based on the days or a specific price, whatever you want.
thank you.
Cool. All right. One last question. We had a few questions on this one. Nazario asked, could you share your screen to show an example of how to activate the API? So I'm guessing you're asking like how to access the API key. So I could definitely share my screen to show that. Just give me 1 second. Cool. Um,
Just answering some of these
yeah.
questions.
Um, so I'm showing a public account right now. And basically, to access the API section here, you would go over to your settings and click on security on the top here. And then you would have API on this as like part of the side nav. And from here, you can generate a new API key or revoke existing one. So hopefully that made sense. One more time, just gonna run through it. Go to settings, security. API, and then from here you can view API docs, create a new API key, or revoke an existing one. Okay. Next question. Okay. A car. We have a question from a car. That can be our last question. Yeah.
Hello?
Hey, a car.
Yeah. Yeah, I just had a quick question. I've created some strategies in TradingView and Python as well. And I was wondering, is it possible to use the signals coming from those strategies to auto buy and sell? And this would be like single legs, so nothing too complicated. Just get in and get out. So these are basically on a 15-minute time frame. So it's not holding for days. It's pretty sometimes holding for max like an hour or 2 hours. But is it possible to do that, getting signals from either Python code or TradingView and then triggering the API call to, if it's a call, buy the call and sell the call?
Yeah, absolutely. So just to clarify here, the signals being generated on TradingView, I'm guessing you're using are you using PineScript or the TradingView
Yeah,
API?
it's Pine script at the moment, but I've also had the have the code same strategy in Python code as well.
Gotcha. Something I've seen some customers do that's pretty neat is they will set up in TradingView
Hmm.
the webhooks and
Yeah, I've used the
basically,
webhooks.
yeah, they'll send an alert via the webhooks and then the webhook will hit like their server and their server can then use our API. Like you can basically parse the response from the webhook and set up an order to send to our API via the alert.
Okay, and that's like, is that supported on like uh, a lot of brokers or like, or that's something that I will have to manage? Like if it's IBKR, um,
That's
yeah.
something you would have to manage, like how,
Okay.
yeah, so how you interact with our API.
Okay. So like where the order gets filled and where it gets sold as well.
Yeah.
And do you know the like the average time, or because you said this, you've had someone do that, but do you know like the average, if it's milliseconds or seconds, like the slippage that happens between when a trigger's given and it goes to the API and then purchased finally?
Yeah, I can't speak for how long TradingView takes to send something over.
Okay.
Just because I'm not sure, but on our end, we're filling in milliseconds. Like we've
Okay,
never had
nice.
like complaints about the fills.
Okay.
Yeah,
So
once we
then it
get the
might be
order and everything's submitted, pretty quick. Yeah.
okay. It might be better to use Python than TradingView.
Um, that would be a good thing to test out.
Yeah. Yeah, I'll
Yeah.
definitely test all that stuff out.
Yeah, definitely.
All right. Thank you.
Awesome. Um, cool. I think that wraps. Matthew, you want to wrap up?
Yeah, sure. Well, I just wanted to say thank you everyone for joining the webinar today. And we're going to be doing webinars more frequently now. So I think our next one will probably be here in early February. So stay tuned. A lot more is to come here on public API trading. Thanks.